Welcome back to the Future of Real Estate. I'm Brett Ellis of the Ellis team at RE/MAX Realty Group. Our phone number is 239-489-4042. We had a little mistake on last week's show. We put up a little graphic on some of the segments that said 238-489. We assure you, and we are making some mistakes. We're aware of them. But it's been fun bringing you this as video as in addition to on the radio. But our phone number is 239-489-4042. We hope to have that fixed in the video for this week. And don't forget our website, which is topagent.com. Okay, Sandy, in the first segment, we were talking about, our market and some couple things we're seeing. And, if we could kind of cut to the current market index that we talked about. If you'll notice, we talked about that we've seen an uptick in the current market index, which is not good for the market necessarily because it means the market could potentially slow down just a little bit. But the good news is we've got season coming up. So that could turn right around. Also, that homebuyer tax credit was set to expire in November, and that may have contributed to this. It's amazing how all these influences can influence the market. And then we also talked about in the first segment how inventory is rising. And you can see from this graph here, the inventory is starting to rise up again. And we've seen 3 straight months of that happening. And pending sales started to decrease this last month. In fact, they're down about 100 over last month. Again, that could turn around real quick now that the homebuyer tax credit has been extended and season's right upon us, and we think a lot of northern visitors are going to start buying. They're already starting to look.
Well, and one of the other things that you just mentioned a few minutes ago, too, was that a lot of the lower-end sales, that we think those are sort of drying up, but yet there was a really bevy of activity in that price range. I mean, everybody was here to grab those up as quickly as possible. Lots and lots of cash sales. So that could also just be an indication of the fact that while those things are leveling out a little bit, the buyers would still love to have them, and they're, but they're buyers for that kind of product, and maybe not the other.
I saw on Facebook, a friend of mine posted he sold a pool home in the 20s.
Yeah.
And those are getting really hard to come by now. But you talk about cash flow. You can buy something. You had a client buy one for, how much was that home?
$14,500.
In Lehigh, okay.
In Lehigh.
It needed a little bit of work.
But
a little work, yeah.
So
the
he puts
work's
10
going to
grand
get
in.
done, and he's going to have a home that cash flows. We had several years where if you bought a home and you were going to rent it, you could not cash flow it.
Several years, almost all time, that was true. You paid a premium to be in Southwest Florida.
You can.
Well, that's true.
You can, if you want to fund your child's college 15 years from now, buy a house right now, cash flow it for 15 years, and you're well on your way to funding your child's college.
But we can't always find a home for $14,000. Those are hard to find.
It doesn't need to be 14.
Yeah, it doesn't really matter what the price is.
We've got a foreclosure coming up in a very nice neighborhood. The price is going to be around $120,000. That will cash flow, and there's a college tuition 15 years from now for your child.
Okay, what neighborhood is that going to be in?
Well, actually, when we get to the videos, but I'm going to show you a picture of that one.
Okay, good.
Yeah.
Because I think our listeners and our viewers like to hear about opportunities. The investors like to find out, what could I cash flow? What could I invest in now? Because the stock market is tenuous at best. People are buying gold, tangible assets. They're not trusting the dollar. The other thing is you're buying these properties at today's prices. And, if inflation really upticks and whatnot, and gold goes through the roof, if you buy something today at 100, it might be worth $1 million 15 years from now just because of what happens to the dollar.
Well, it could be, but if nothing else, it ought to double or triple. It should do something like that,
Yeah, although we're not promising returns.
No, absolutely.
We're just saying what can happen when the dollar falls in inflationary times.
Exactly.
Even without inflation kicking in, just the normal sustained growth of 3 or 5% a year, which is nice, healthy growth. This is doable if you want to finance something 15 or 20 years from now. It's paid for as long as you go. Someone else is paying that house off. And then with the increase of values, when you're ready to go, you've got it.
Tell you what, we got a strong second half hour coming up to the show. We're going to talk about the Treasury Department's new short sale guidelines. A lot of good stuff there. We're going to give you some hot properties of the week to watch. And just a lots more. You've been watching and listening to The Future of Real Estate presented by the Ellis team at RE/MAX. Don't forget our website, which is topagent.com, and our phone number is 489-4042. Stay tuned, and we'll be right back.